Hi everybody, this is Lance from ThetaTraders.com here, making this video in December. Got my December Zen calendar. Nice rocks going up here. I bought this Zen calendar beginning of the year for 2023. Got to think of one to get for 2024. Maybe I go for a crazy cat one, crazy dog one. I don't know yet. So we're going to look at how to actually track your returns. If you were just buying, say, SPY and holding it, doing nothing with options with it, that's pretty straightforward to track the returns. Your brokerage will tell you. Just go to google.com, type in SPY in a certain date range. But if we're selling options on futures, it's a little bit more complicated. We have two main factors at play. One is your net liquidating value that could fluctuate up and down. And then you also have your closed trades. So let's say I sold a strangle on, say, gold, took in $500, and then I close it out at $250. That'd be a $250 gain. That would be realized into your account. However, your net liquidating wouldn't necessarily show that. So I'm going to be actually tracking the net liquidating value change and the closed trades change. And I'll show you the method I'm doing that in this link below. Let's get right to it. All right, so I'm going to go over a blog post that I posted yesterday. The link is in the description down below. So I'm going to be tracking my trades in 2024. Now, it could get tricky. There's a change in, again, your net liquidating value. That's if you close all your positions currently. You're going to have a possible net gain or loss depending on when you did that to when you close them. And also a change in the realized trades you open and close. These could be a bit different, especially when VIX expands quickly. If your VIX goes up, your volatility increases, and then different positions that you might have been entering in are at a short-term loss, especially if you just close them out. That doesn't necessarily mean that the trade's not going to work, though. So adding in funds regularly, which I plan on doing, also makes it more complicated. So if you had a $5,000 account, and let's say it grows to $5,500 in your net liquidating, that'd be a 10% gain. But what if I added, say, $20,000 to the account, and then you got to factor that in because you only made, say, $500, but you added 25 grand, your actual returns that you made were quite a bit different than if you just had your 5,000. So here's how I'm going to determine it. And ThetaTraders.com members will be seeing this. I already have the demo spreadsheet ready for 2024. Always start early, get ready beforehand, right, in December. So here's some sample data. SPY did go up at 0.97% last week. My net lick percent, so the change in my net lick from last Friday to this Friday was 1.7%. My realized percent gain and loss is 2.6. And then I'm going to look at the net close every Friday. I also did add $2,000 to the account on Friday as well, which I do have to factor in for the next week. So in the beginning of the month, I'm going to add my funds from savings. Each Friday, check the change in your net lick from the beginning of the month and then with the added funds. So I'm going to be factoring the added funds. I'm going to regularly be adding in the beginning of the month to make the accounting a little bit easier. And then I'm going to separately track the closed trades or realized percent, profit or loss. Dividing that by the net lick will determine this percent right here. Then every week, I'm going to track the realized gains and losses from trades that I actually take and close. So they could be trades from a few weeks or even months ago. If I happen to close it during a certain week, that'll count in the next week's realized percent. And then I'm going to track the change in SPY as well, because I want to gauge, am I doing better, worse, or pretty close to SPY in a long time frame. It may or may not work every week, but I think in the long time frame, selling options on futures should beat out SPY. And that's why I do all these strategies. So SPY, easy to figure out. Just go to Google. I typed in 5 days from Friday to Friday, went up 0.97%. And that's what I put here. Pretty straightforward. For the net lick change, I'm just looking at the net lick from last Friday to this Friday, just what my brokerage account says. And then it went from 51,536. It was 876 lower than that. So I just did the 876.11 gain divided by the last week's net lick, and that was 1.7%. Again, pretty straightforward calculation. All I got to do is track the net lick each week and then see the change in it. Now, realized gain will be very similar as well. You're just going to look at all the closed trades that I had, and I'll show that shortly. So $1,379.75. That's what I closed out already in December, which is a really good return. Already made 2.6% on the realized trades. So just quickly looking at the closed trades that I had for December. Again, a lot of these, pretty much all of them were from trades that I made in the past. So we closed out a copper strangle, 175. I had a $110 on just a naked put on oil. Oil volatility dramatically decreased after placing the trade. This was only about an 8-day trade, by the way. Safeguard trade, 102.5. With consistent passive profit trades where I do monthly low deltas, doing really well. And then I have my safeguard closes. Then for the safeguard, I do have PDSs. These are assuming that they're going to expire worthless this month. It's not technically realized yet, but it just makes the accounting easier. All I do is in the beginning of the month is look at all the possible PDSs that will expire this month and then see what the loss would be. So some of these might change to a positive, but they're pretty far out of the money with the bull market. They're most likely just going to be this losses right here. Now here's the tricky part. I added 2,000 into the account. I want to factor that into my growth. So if I didn't count that 2,000, then my returns could be possibly a bigger percentage because I'm using 2,000 more dollars to make more trades. So what we're going to do is add 2,000 to the weekly net lick. So 51,536 plus 2,000, 53,536. Key part here, I'm going to base the next week's calculations on this net lick change and realized percent change based on the new number. This would factor in the added funds. So over here, I'm going to add 2,000 to this account for this week. Any closed trades that I make for this week will be dividing by the 53,536. And then that lick change I'm still going to be factoring in based on 53,536. I'm not going to put $2,000 gain here because I added the funds. It's not the same as actually organic growth in the account, right? I plan on doing this every week in 2024. Again, members of ThetaTraders.com will see my full transparency, exactly what trades I make, what trades I close, how much the realized returns are. I'll also be showing the net lick each week. And then just main goal is to try to see how my money grows compared to SPY. If it's not growing compared to SPY, you might as well just hold SPY because there is a little bit of work to actually sell these options, right? Now, the account is over 50 grand. I did add 2,000 for December. It's not going to significantly change those percentages. But in the beginning of the year, I had $15,000 and I was very aggressively adding funds to it. So that would change the percents quite a bit. So luckily, I won't change it as much, but definitely want to be fair about it and track those changes. And just a few closing thoughts here. Right now, the volatility in the VIX is very low. It's under 13. It could easily expand sometime in 2024, and it almost definitely will at one point in the year. So your net lick will change quite a bit, especially if we're selling quite a bit of options. If your volatility when you're selling it is low, then the volatility increases. The actual premiums will be larger, assuming the price of the underlying doesn't move at all or much. So the net lick change could be fairly dramatic at times. The closed trades, I think, is a little bit more realistic on the long-term progress because these are actual closed trades and we're tracking every single one of them. You know, if you're selling a spread at $500 and then you stop out at, say, $1,500, you're losing $1,000 in your account, and that will be factored in. Also, in other trades, if I'm, say, taking in $500, closing at $250, subtract those, you get $250 gain, and that will be tracked in as well. So curious to see what happens with the net lick change and the realized opens and closed trades in terms of what the percents happen. And also curious how it goes with SPY. It did very well this year. SPY did very well this year. So we'll have to see what happens in different market conditions. If SPY stays, say, flat in 2024, how's my returns doing compared to that? If SPY continues up, want to see the comparison. If SPY drops, want to see how ours work as well. And then it'll be a good journey to factor in all the different conditions and how the changes on the account go. So again, if you're interested in seeing my journey and also being able to take my trades if you like to, join at datatraders.com. And we have many different membership options for you. It could help you one-on-one on how I sell options for premium. So again, Lance at datatraders.com. Thanks for watching this video. Appreciate all your support. Like, share, subscribe, all that good stuff, and helps out the channel. And I'll see you guys on the next one.